So our strategy here, a lot of the people are former Nova Gold, Wellgreen, people that I've worked with at Placer Dome, and others that have come together. So we've worked together oftentimes over several decades. So it's a great group of people to be basically working together with again. As I mentioned, our approach has been brownfields, acquisitions in big districts where we think there's scale, and we think we've got two exciting opportunities in that area already, and we're basically looking to pick up a third opportunity that's going to become a copper company for the group here in the next short while. And really, as I mentioned before, we think we're in the right part of the market cycle. This is a chart that we had adopted from Canaccord, basically showing the last 4 or 5 bear market cycles and the last 4 or 5 bull market cycles. You know, we think that we are still at the very beginnings of this cycle, and don't know the timing, but it's comparable to several past cycles, and we think this is a good time to be looking at these type of investments. The two companies we're going to talk to you about this afternoon are both in this discovery stage, but because these are brownfields, the probability of us finding discoveries and advancing is much higher than a typical situation. And in fact, in the case of metallic, as we'll show you in a few minutes, we already have 3 targets that have initial beginnings of mineral inventories in them that are going to be growing. And in the case of Group 10, it's about a year behind metallic. We think we have a good chance to come out of the chute with something where we can start to put together an initial resource. And we think that really makes this an optimal time to be looking at these two companies. We just recently, I was asked to put together, because it's a long time ago, kind of what was that case study of Nova Gold? And so it took me a while. I had to wade through kind of the news releases and stuff to get the timing, but it was a huge opportunity in value creation. Basically put together the Donlin asset at the cycle low, and we took that company valuation through drilling and resource development and resource expansion to up tenfold or more as part of developing Donlin. And then when Barrick assumed management of the JV, basically stepped in and did the same at the bottom of the copper market cycle with the Galore asset. So this is our model. This is our kind of game plan. I would hope to be as lucky as we were in terms of scale of assets, but I think we've got some great assets that we're working with, and this is the background strategy that we're trying to replicate in our companies. So what have we been doing at Metallic Minerals? Over the last 18 months, we had an opportunity to come in and pick up a 60 square kilometer block in the eastern end of the district that had 5 past producers on it. These would have been shallow pits and adits, basically high enough grade they could be mined by hand in the 20s and 30s. So from our point of view, they're kind of like a bulk sample. We've had over 300 million ounces past production plus current resources in this district. The deepest mine is 300 meters. The deepest exploration hole is 400 meters. So we're barely scratching the surface. Geologically, this district, this is a meta-sediment hosted silver lead zinc vein system. So Coeur d'Alene would be the big boy in the sector in terms of style. We think we have the potential. You can do the math. It's not outrageous to say 300 million on the western half of the district down to 300 meters. Let's say the eastern half has not quite that much potential. Maybe it's only got 200 million ounces. You've got the same geology there. Structures continue. Go to 600 meters, so double the depth. You're still shallow compared to Coeur, where they're mining a couple of kilometers depth. It's pretty easy to get to a 1 billion ounce figure in this district. Why hasn't it been looked at in the past? Because you had 60 different landowners that basically made this up, and which have been consolidated now under us. We've got 3 targets currently that are at a beginning resource delineation stage, 6 other targets that we're looking to drill this year for first drill holes, high grade at surface. So we're hopeful that among these 9 targets, we've got a couple that can be similar to some of the past discoveries by Alexco, and then we can demonstrate the ongoing potential in the district. Hard to see it in this photo, but what the intent of the photo on the right is just to show you've got highway access, you've got grid power. It's rolling hills, it's not steep terrain. This is slide label 8 in the presentation. So it's a place that you can work year-round. Alexco regularly drills throughout the winter. Our operating season in terms of prime field season is May till end of October. So it's a great place to work and operate. Yukon, as some of the folks in the audience know, is really a change here. It's been since the late 90s that we've seen some of the bigger producers come back into the Yukon. So it's been a long drought It's juniors who continue to work and explore. You've got this long history. But I think it's really interesting that we're seeing this recognition. You've got fantastic geologic endowment. You've got great infrastructure. You got a first world jurisdiction with mining as its #1 economy. And I think that's one of the reasons we're seeing the interest in the Yukon once again. So in terms of where we're located, for those of you who are not as familiar with the Yukon, this is the lower half of the Yukon district. We're right here in the center of the Yukon. You've got hydropower at Mayo. The highway continues on past Capstone down to Skagway, where the existing concentrate shipping facility is already in place and used by both Capstone and Alexco historically. Plus our First Nation here, NND, has agreements with both Alexco and Victoria and ATAC, so they're a mining-friendly group, and they've had 100 years of mining in their region. Zooming down to the district scale, here's Alexco in kind of this light green color. This is our land block in the kind of golden brown. You can see it's on the east, on the south. Sometimes we're internal to Alexco. You've got Mount Hinton to the south, which is more of a gold target. So we start to see the silver lead zinc veins transitioning to gold. Banyan is here on the western part, looking more at gold systems as well. Victoria across the valley with their big open pit, and ATAC and Barrick up to the east. So it's one of these classic districts that's got a lot of different styles of mineralization. You know you're in elephant country, and it's the kind of place that you should be exploring. This is the mill that was built in 2010 by Alexco, right here in the center of the district. At 800 to 900 grams per ton, this is top in class for silver grade. That produces at only 400 tons a day, 3.5 to 4 million ounces. And there's excellent opportunity to take that to 600 or 800 tons with very modest capital. Because these are shallow deposits, the 2 declines were about $10 million a piece because they're relatively shallow. So we're talking low CapEx development, and you get these outsized IRRs. Where they're a bit shy is on mine life, 8-year mine life. You'd like to see a 15, 20-year mine life between their own exploration and our exploration now that's in full swing on the rest of the district. We think there's excellent opportunity to continue to make discoveries like Alexco has over the last few years, and to be able to bring new resources either to the table to be produced through Alexco, or if they're large enough, as their own standalone operations. So looking at reserve grade for the primary silver mines around the world, just to kind of highlight this quality, you've got a handful of mostly open pit, low grade things. You got a big basket of medium grade, mostly underground mines. And then you really have 6 assets in the silver space that stand out on a grade basis. Keno Hill is the highest silver grade, and when you add the lead, zinc, and gold, it's the 2nd highest equivalent grade. It's one of the only ones that's a standalone producer, not already owned by Hecla, Hochschild's, Pan American. And so it really stands out from a quality point of view. Plus, geopolitical risk, it's not in Mexico, Peru, Guatemala, Argentina, or Bolivia. So it really stands out as one of the few silver opportunities in a low-risk jurisdiction. So this is a picture of the Belkeno mine. You're underground. This is the mine face. So this is the quartzite boundary here on the left, the quartzite boundary on the right. Almost no mineralization in the wall rocks. That means it is the structure that we're looking for, the cracks. And where these cracks can get bigger, you get these multi-episodic veins that can grow up to 5 or 10 meters, but more typically between 1 and 3 meters is a classic Keno-style vein. You've got the silver-rich galena. You've got a lot of sphalerite in there, quartz carbonate. This would be, that's a meter per scale. This is probably 1,500 gram per ton silver grade across that face with lots of silver. So geologic map of the district. You've got a series of layered metasedimentary rocks. You've got the upper plate rocks here. Then you've got the sourdough formation, the Keno Hill quartzite, which is one of our primary mineralizing rock types. It's a brittle rock, and as these structures rip through it, it basically creates the open space to form the veins that we saw in the picture. And then the greenstones is the second nice brittle host rock that when those structures rip through it. So the orange circles here are the past producers. The yellow circles are the new resources, and you can see they're kind of concentrated towards the eastern boundary. And the red circles represent the 8 past producers. This would have been 1920s and 30s level production by hand and that are on our property. So there's 12 major known mineralized structures. Basically, so you can see in the red lines here. and those continue. And as you get further east, because of that private patchwork land ownership, that's why they haven't seen as much exploration. In addition, this area here is lower elevation, more soil cover, more vegetation cover, so it wasn't prospected as intensely. If we take a look at production, the most intensely explored was the Birmingham trend. So between past production and current reserves, we've got 140 million ounces on that trend, only down to about 300 or 400 meters depth. And then you can see the others have been much less intensely explored, but the potential on these others remains. So what we're going to do is just quickly step through a couple of cross sections to give you a sense of what our exploration model is and why do we think we can find more significant deposits here. So we'll start with the Birmingham trend. Now this is mostly Alexco's ground until you get to the far east here, but it's really, the reason we're putting this up is to show you the styles of mineralization we see. So you're in a long section. This is plane of the vein as it crosses through the lithologies. So what you've got in the center of this trend is the historic Hector Calumet mines, collectively over 100 million ounces of high-grade production. You had a small amount of historic open pit high-grade production at Birmingham. Alexco was exploring along the trend about 1 kilometer away from the largest single producer in the district, and they found the Birmingham deposit, which is now about 25 million ounces and open. I think it's going to continue to grow here at depth. So as an explorationist, when I'm seeing a discovery of that quality next to one of the biggest producers in the belt, a kilometer away, it really tells you there's still a lot of low-hanging fruit to be found in the district. As you come along the structure to the east, you come out of the Keno Hill quartzite, now the greenstones become more important, so a larger greenstone like this at the Sadie Ledoux is significant. It's open at depth, but it shows the other style of mineralization. Looking now, we have the same section on top for reference. If we step one structure to the west, the Elsa trend, so these three mines are kind of the second largest concentration of historic production. We picked up the Silver Queen property from a family that had held it since 1923. They've only trenched at surface, but stratigraphically it sits right underneath the Sourdough Formation. It's almost an identical stratigraphic position to the Birmingham. As we go across the Elsa deposits to the east, our Formal project, which we purchased from Independence Gold, small historic open pit, and about 1 million ounce resource that's there at surface, and it's open with 4 different chutes at depth. So it really has only been tested to about 100 meters depth. And so we are looking at that as a potential Sadie Ledoux opportunity. It's one of the ones we'll be drilling this year. Stepping to the next major structure to the east, the Flame and Moth, there was a small amount of historic production. When they were building the mill, they basically stumbled into the structure at Flame and Moth. That's now 30 million ounces and open. We staked the Duncan Creek, which is the down dip projection on that. So that's one of our areas of focus. And then as you come across now towards the summit, you're starting to see those quartzites show up again, which are one of our best hosts. So these areas much less explored, but lots of potential just following these known mineralized structures. Last two structural trends that we'll talk about, the Bell Keno, this was that mine face we were looking at earlier. It's right underneath the Sourdough Formation, the top of the quartzite, open at depth, probably 10 million ounces and open. As you come across from Bell Keno, shallow high-grade historic producer, shallow high-grade historic producer, the historic Keno Hill namesake mine, and then a whole series of shallow producers or prospects. Likewise, the parallel homestake trend, shallow high-grade producer, shallow high-grade producer, shallow high-grade producer. So after acquiring the original 60 square kilometers last year and then aggregating an additional 100 square kilometers around that through acquisitions, basically friendly acquisitions where we went into these private families or these small groups like Strategic or Independence, we said, why don't you sell us those 25 or 30 claims you have in the Keno district for shares? We'll give you a small royalty with a buyout. You'll get exposure to everything that's going on in the district. And that was a way for us to acquire smart deals in a down part of the cycle and basically put together the rest of the district. We're attempting to unitize it so you've got basically Alexco and ourselves. So we're really quite excited about what we've put together. We had 4 months of ground truthing last year, so we got on the ground in May with geophysics, started doing mapping, trenching, and all the other layers, soils, and things that we needed to do. At the end of the summer, we had 2 targets at Caribou and Homestake that we were ready to drill. We had historic production at surface, We had a little bit of trenching that was done historically, a little bit of really shallow drilling. So we came in and drilled underneath those and basically demonstrated that we've got open ore chutes that are the same orientation as we see in the other part of the district within the Keno Hill quartzite. And those are beginning resources. There's probably 1.5 million ounces on those to start with. So they're small from a silver point of view to start with, but they're completely open at depth, and it really was a proof of concept for us in terms of where we were going. So next steps for us are really shifting into this year's program. We've mobilized the crews. It's really a drill-focused program at this point with 9 targets that are going to be, we're looking to test this summer. 3 of these already at Homestake, Caribou, and Formo have initial resources that are open at depth and along strike that we'll be drilling as a first priority. Second priority is to come in these targets that we trenched last year and got good high-grade results at surface, drill 4 to 6 holes under each one of those targets to try to determine if we've got an ore shoot that is developing in that area as well. And then we've got 20 other earlier stage targets that are out, mostly on the eastern end of the belt where it's got more soil cover. But we've either got a soil anomaly or we've got a rock chip anomaly. We've got something that tells us the structure is going through there. We want to go in and test those to see if we can move those to a drill stage next season. So it's been a quick move for us. The opportunity is with the existing roads that are already there, all of this is truckable. The mill sits in the center of the district, so anything we can find, even if it's relatively modest in scale, could potentially be processed as additional ore for Alexco. If we find something bigger, we've got the opportunity to look at a standalone. You're in a district that's permitted multiple mines in the past, and we think it would be fairly straightforward to be able, once you had a critical mass in terms of resource size, to look at new development. The capital structure, it's been a bumpy road, so to speak, here for the last couple of years, as you know, in the sector. We had a big run up in early 2016. And then it's been kind of a consolidation. This is us in the green. We've been a little less volatile in the sector. We've outperformed the GDXJ and the silver ETF. We actually did see the market respond to our exploration results from last year, which was encouraging. At 56 million shares outstanding and management owning 25%, this is still quite tightly structured. We've got a market capitalization of around $20 million, just under $2 million in cash, and about $2.5 million in the money callable warrants. So we're right now in discussion with these holders of these warrants, looking at exercising those early. They still have about a year on them. And based on that discussion, we'll understand whether or not we can top up. We'd ideally like to spend a bit more this summer at the Keno project. But we're in good shape. We've got an exciting program that's unfolding in front of us. And our hope is to be able to, with some success this year, maybe advance a couple things to actual 43-101 resource by next year on a couple of these targets.